Broadcom's earnings are not interesting because the company is suddenly another Nvidia. They are interesting because Broadcom is testing a different question: can the AI trade build a second lane around custom silicon and networking? The headline number was large. Broadcom reported second quarter fiscal 2026 revenue of $22.187 billion, up 48% year over year. But the market's real search term was not total revenue. It was AI semiconductor revenue. That number was $10.8 billion, up 143% year over year. This is the number that changes the conversation. It tells investors that Broadcom's AI story is not only a label attached to a diversified chip company. It is a revenue line big enough to move the entire narrative. The reason is that Broadcom does not need to tell the same story as Nvidia. Nvidia owns the GPU platform narrative. Broadcom's lane is custom AI accelerators, AI networking, and connectivity for very large cloud customers that want specialized infrastructure around their own workloads. That is why the word custom matters. If hyperscalers keep building their own AI systems, they still need chips, networking, switching, and high-speed connections. Broadcom becomes a way to track whether AI spending is spreading outward from one dominant platform into the plumbing and customized architecture around it. There is another layer too: infrastructure software. Broadcom is not a pure semiconductor story anymore. VMware and software cash flow give the company a different earnings profile, which can support margins and capital return, but it can also make the AI signal less clean. Investors have to separate the AI revenue line from the broader business mix. The bullish interpretation is simple. AI demand is no longer only about buying more GPUs. It is about building entire data center systems, custom silicon, networking, connectivity, software, and recurring infrastructure. In that version, Broadcom is not a replacement for Nvidia. It is one of the clearest second lane names beside it. The risk case is just as important. When AI semiconductor revenue is growing this fast, expectations get very aggressive. The market will ask whether demand is broadening across customers, whether revenue is concentrated, whether guidance can keep expanding, and whether valuation already prices in too much of the good news. So the right way to read Broadcom is not just beat or miss. The right way is to ask three questions. First, is AI semiconductor revenue still accelerating? Second, is custom silicon demand becoming broader and more durable? Third, does software cash flow strengthen the story or distract from it? The bottom line, Broadcom's Q2 report made the AI second lane story harder to ignore. But the next confirmation has to come from customer breadth, guidance, and whether custom AI infrastructure keeps turning into real revenue. Use this as a research map: number first, business model second, expectations third.